Hello, good morning, ladies and gentlemen. How are we all doing today? And I welcome you to yet another promising session on our morning live studio. And during the live session today, we are going to be examining past price patterns and market behaviors, recurring trends, support and resistance levels, and other crucial insights that can aid us in making an independent and well-informed decision for today. And it has been quite an interesting 24 hours so far. So good. We had some profit-taking activities on the US oil spot. And I think on the XAUUSD, we had a scenario where we were profitable at one point and we moved our stop losses. And then we had some small profit, though it wasn't that significant, but it's something that we can call considerable, at least for the first half of the week. So we are going to be running into the details on that one and how we intend to manage the existing running position and at the same time identify potential trading opportunities ahead of the New York and London session today. And for those who are joining us for the first time, you are highly welcome. And what we simply do here is to gather and review the current market structure. So we do have a list of financial instruments that we have been monitoring since the beginning of the week, and this is a backdrop of the videos I shared during the course of the weekend. So we have the US oil spot, the GBPUSD, the XAUUSD, and the USDJPY, which is the instrument we are monitoring for this week. So I did an holistic analysis on these pairs and how we intend to take advantage of potential trading opportunities this week. So what we simply do here is do a follow-up detail on this instrument. So we shall be focusing mainly on the 1 hour time frame. So if you do want to have a background knowledge of how we got into the current position we are in on the 1 hour time frame, I would advise you to watch this video so that you can have a background knowledge of what we are talking about, and it will also help you in making your independent decision on this instrument we are monitoring so far this week. So once again, you are welcome. And on this note, let's dive right into the business for today. So you know how we do it. The first thing we normally want to do is to keep tabs with the fundamentals. Let's check the fundamental calendar to see if we do have any macroeconomic event to look forward to for today. And in fact, you know how we do it. We normally focus on high impact events that will be affecting any of the currencies that we are looking at for this week. So we are going to be looking at if we are going to be seeing high impact events that will be affecting the US dollar, the pound sterling, and the Japanese yen. And from what we see here on Wednesday, May 31, we do not have any high impact that is going to be affecting any of the currency pairs that we are monitoring today. And so we are going to be relying on our technical skills to identify potential trading opportunities and at the same time use the information we have to manage our existing current position. So with that being said here, let's dive right into the business for today. And one other thing I would like to mention here is that the debt ceiling issue seems not yet to be resolved right now, as we still have some issues going on off and on. And this is really causing some level of indecisive situation on the US dollar. So we are going to be looking at that too. And let's see what the psychology of majority in the market is, using basically the price action to decipher what is going on so that we can position ourselves ahead of both the trading sessions. So as usual, the first commodity we are going to be taking this morning is the US oil spot. And on the US oil spot, in fact, this is our most profitable trade so far this week, as we have been selling the US oil spot since the beginning of the week. So let's quickly run through what our expectations were and what we saw on this chart that informed us of the decision to sell the US All Spot. So here we are on the 1 hour time frame, and the first thing we observed during the early hours of this week was the fact that price action was a little bit choppy. So we had a situation where price action was ranging between the $73.55 level and the $73 area, giving us an indecision phase in this market. And with the situation we have here, it is quite clear that a majority are still trying to test waters to see where price action is likely going to be going for this week. And as you know how we do it, whenever we have this kind of simple flat channel, the next thing we want to be doing here is to wait patiently for a signal to come, which obviously will come in the form of either a breakout of the resistance line to give us an opportunity to buy, or the breakdown of the support line to give us an opportunity to sell. And in fact, we saw with a sell stop order below the $73.05 level, we saw our first sell position for the week triggered around this area. And I made mention here on Monday that we are going to be, for those who had missed out on that opportunity, that we want to see price action give us another structure for us to anticipate another entry if we had missed out on that one. And one of the scenarios we painted on Monday was that price might likely come back to do a retest of the support line that was broken at the $73.05 level. And this was exactly what happened during the later part of during the early hours of yesterday. We saw the situation happen, hereby triggering a position at that point. And since then, we have been selling the US All Spots. And as you can see what has been happening here, we had key structures broken, hereby giving us multiple entries to take advantage of this to maximize the bearish momentum we saw here. So we saw structures like the $72.30 level. We saw structures like the $71.80 area, and we also saw structures like the $81 level being broken to the downside. And in fact, we had our TP target at the $70.60 area, just exactly around that demand zone to give us our first TP target hit for the week. So for those who are taking advantage of this opportunity on the US All Spot, kudos to you for being on standby to have caught this move. And in fact, the move continued to the downside here. And I made mention something here on my public platform yesterday that I want to see price action do a retest of the $71 level before I want to be joining. So despite the fact that we hit our TP target here, I was still hoping that price will come back and do a retest of that structure in anticipation of another wave to the downside, which unfortunately never happened. So we were not able to maximize the bearish move at that area. But if you are taking advantage of the breakdown of the $71 level, well done to you for being on standby, as you would have maximized the profit on this bearish momentum so far. So well done, guys, and let's see what our expectation is going to be like for today. Now that we have a breakout of a very significant structure at the $71 area, what is going to be our next line of action? Well, the first thing I would like to say here is that we want to take the technical perspective of this market, and you know what we look out for when price action breaks out or breakdown of a key structure like this. We want to see price action come back to do a retest of that area, and if price action continues to find selling pressure right below that area, then definitely we want to be looking out for selling opportunities. And if we are going to project this expectation on this chart, what do we expect to see here that will give us that confirmation that we are having a retest of structure? So now, since we have the breakdown of the $71 area right here, and one thing we saw is that as soon as price action got into that $69 level, we begin to see buy pressure resume again in this market. And with this whole situation here, we saw how price action fell into a choppy situation, giving us a range between the $69.80 level and the $69 area. So it is quite obvious that there is an indecision going on around this market, and there is a possibility that price action, this whole structure we have here, could either transition into a trend continuation pattern in the form of a bearish rectangular pattern, for instance, or it could transition into a reversal pattern that might likely incite a retracement of the previous impulse leg that we have here. So let's look at what I'm explaining around this area. So with the situation we have right here with a flat channel, you know how we do it. The next thing we want to be doing is to wait patiently for price action to either break out of the resistance line to give us an opportunity to buy, or break down the support line in anticipation of another wave of bearish momentum, which obviously will have turned this structure into a trend continuation pattern. And remember what we said earlier, that whenever price action breaks down a key structure, just like what we have here, there is a likelihood that price will come back to do a retest of that level, probably to incite another wave to the downside. And in fact, we also have a trend line here, which was also broken during the course of last week, which is another potential zone where price could come into to incite another wave to the downside. So these are the things we are going to be taking into consideration while we continue to monitor price action from this area. So now let's talk about the potentials of buyers around this area, that we might likely have a retracement come in where price action breaks out of that resistant line at the $69.80 level. So right now, what we are going to be looking out for to do a counter trend opportunity here is if price action breaks out of that $69.80 level, then at this point we might likely be considering an opportunity to buy, which is obviously is a counter trend opportunity. And I want to see this as the beginning of a retracement phase. Now, how do we intend to open a position here? Well, for me here, and considering the fact that this is a very strong bearish momentum, we would rather wait for some confirmation to happen here before we join any momentum at this point. So what we want to do here, as soon as we have a breakout of the $69.80 level, is to scale down into our lower time frame, like our 15, 10 minutes or 5 minutes time frame, to look out for retest of structure, giving us signs that buyers are gradually gaining some momentum around or below that area to incite another wave to the upside. So we want to be part of that move as soon as we start seeing signs that buying momentum is gradually building up above the $69.80 level. Now, there is a caveat to this whole structure here, that is, if we now continue to buy and join the bullish momentum to the upside and price action gets into the $71 level, remember how important this structure has been in the last couple of weeks. It has been a very strong demand zone before we saw price action break down the structure here yesterday. We want to see how price action will be reacting to this level. So in as much as we see price get into that area, we move all stop losses to secure the current buy position and wait out to see how price action will be reacting to this area to decide if we are going to be adding more buy position to our existing trade, or probably get ready to join a bearish move to the downside. So if we start seeing selling pressure right below the $71 area, then we want to be in for an opportunity to sell. But if price action breaks above the 71 and we start seeing buy pressure above the structure on our lower time frame, then remember, we are back within the buyer's territory if that happens. This area above the $71 area has been a strong buying niche in the last couple of weeks. So if a break above, retest of that area happen, buy pressure above the structure, then this will give us a confirmation that buyers have come back to stay in this market. Then we want to be part of another opportunity to the upside. Then if we continue to ride the move all the way, we also have structures around the $71.80 area where we also want to see how price action is reacting to that level to decide if we are going to be adding more buy position or getting ready to sell at that point. But trust me, I will be with you in the comment section of both my trading view and Telegram platform to give you an update of what to look out for when price action ever gets into the structures we just talked about. So that is what we are going to be looking at here if we are going to be considering buying the US All Spot for today. Now, with that being said here, let's dive right into the other expectation. That is, what do we want to see on this chart that will give us the inclination to sell the US All Spot today? And obviously, price action has been bearish since the beginning of the week, and there is a high chance that price action could continue with that trend going forward. And one more thing I would like to say here, coming from the fundamental aspect of the market, is that we are expecting the OPEC Plus to meet on the 4th of June, and that is about 4 days from now. And majority in the market are not sure what the outcome of this meeting is. And I think those who have a buy position on this one are probably skeptical, and considering the fact that the Fed is likely going to be raising the interest rate next month, the OPEC Plus meeting is coming in about 4 days from now. This has caused a little bit of panic in this market, leading into this fear that we saw in this market, hereby resulting into a bearish perspective so far this week. And so it might likely continue to the downside at this point, judging from the situation we have been witnessing since the beginning of this week. So what we are going to be doing here is to position ourselves for a potential trend continuation to the downside. Since we already have a structure here, a channel between the $69.80 area and the $69 level, there is a high chance that we could have a breakdown of that structure. And if we do have a breakdown of that level, then obviously we are in for a trend continuation pattern in the form of a bearish rectangular pattern. So what I'm going to be looking out for here is to have a sell stop order below the $69 area. Of course, we have been profitable on the US All Spot so far this week, so we could still afford to risk about how many pips is that so our stop losses was going to be somewhere right close to the resistance line here with about 70 pips stop loss. So we could still risk that to test waters and see if this momentum will continue to the downside. And if it does, then we are good to go to continue to ride the move all the way to the downside. And if you're a cautious trader and you think, okay, fine, I want to wait for confirmations to happen, then definitely what you are going to be looking out for here is to see price break down the structure, scale down into your lower time frame, then look out for retest of this level to join that decline to the downside. But personally, for me, I want to have a sell stop order, considering the fact that we have a strong bearish momentum to the downside, and we might likely not get the chance to enjoy a retest of structure before price moves to the downside. So let's see how this plays out in the next couple of hours, and trust me, I will be giving you updates in the comment section of both my trading view and Telegram platform as we continue to monitor price action. So if you have any questions regarding what I just explained here, feel free to let me know in the comment section. So I will be moving on to the next pair. And the next option we are going to be looking at today is the GBPUSD, I think. Okay. The GBPUSD. So on the GBPUSD, we had a buy position yesterday, actually. I think we had 2 buy positions after we saw the breakout of the 1.2323580. Which I told us during the live session yesterday that we should have a buy stop above that structure. And then we also had a buy stop order above the 1.23750 as well, which also gave us another trigger to the upside. And since then, we saw our price action moved over 70-80 pips in our favor on the first position, and the second position moved about 60 pips in our favor before we started seeing this whole bearish momentum began in this market. And I do hope you moved your stop losses accordingly to lock in some profit, and if you had done that, you would have been taken out with at least some profit at some point in time, depending on where you moved your stop loss level to. Now that we have the situation, well done to you guys for being on standby. Though we didn't really have a significant profit on the GBPUSD in the last 24 hours, but at least we are still on the positive side of our portfolio as regards to the GBPUSD. But right now we are heading into the New York session today, and how do we intend to take advantage of a potential trading opportunity around this area? So now, what we are going to be doing here, first of all, I want us to scale up into the 4 hours time frame. Let's quickly have an holistic perspective into what is going on in this market, after which we shall be coming back here to make an informed decision for today. So scaling up into the 4 hours time frame, this is what we were able to spot on the 4 hours time frame at the beginning of this week. And what I did here on the 4 hours time frame was to take into consideration the activity of price action since the beginning of this month. And the obvious fact here is that price action has been bearish since the beginning of the month. And to further emphasize the strength of the sellers here, we have connected the series of lower highs to give us a bearish trend line, which we said we are going to be using to guide our trading activity for this week. Now, in addition to that trend line, if we zoom into the current structure here, there's another important factor that led us into considering buying the GBPUSD at the beginning of the week. And one of the factors here is the fact that as soon as price action got into that area, around the 1.23100 area, we begin to see buy pressure resume from this level. And not only that we saw buy pressure, we saw higher lows here as price action was unable to break down the previous low to signal the gradual momentum build up for buyers in this market. And to further emphasize this, we had a trend line figured out, which at this point is considered to be a temporary trend line. And after connecting the series of higher lows, we had a trend line to work with. And what we did here yesterday is that we want to see price action break out of this neckline here after identifying something that looks like a reversal pattern here. So we consider the bearish impulsive move right here. Price came into the 1.23750. We saw how price was unable to break down of the previous low, giving us something that looks like a reversal pattern in the form of a double bottom structure. And you know how we do it. We want to see price action break out of the neckline of that reversal pattern, which would also have broken out of the bearish trend line, which has been supporting this bearish momentum since the beginning of the week. And obviously what we saw here yesterday was quite interesting. We saw our price action broke out of that structure, triggered our buy position, and we have been witnessing some selling pressure here. So now at this point, are we going to be selling? Well, at this point in time, I'm not considering selling here, as I still think that we still have a bullish setup unfolding. And one of the reasons why I've said this is this. Now, if you look at the structure closely, you will see how price action broke out of that trend line, the bearish trend line we identified earlier, broke out of the neckline of that reversal pattern, had the 1.23750. And you know what we expect from a technical standpoint. Whenever price action breaks out of a key significant structure like this, we expect that one point in time, price is likely going to come back and retest that structure to incite another wave of bullish momentum. And with this perspective in mind, it is very important that we remain patient here to see how this candle is going to close in the next couple of hours, and we want to see if we are going to be citing some reversal patterns around this area. So one thing I want to project on this chart is, since we already have a breakout of structure, I want to see price action come into this area, which is in right now around the 1.23500 level, a very strong psychological area considering the round figure of that price. And I want to see something like buying pressure resume around this area. It could come in the form of a reversal pattern, a double bottom structure, inverse head and shoulder, a falling wedge, whichever case it may be. We want to see, importantly, buy pressure come in here, after which we want to be part of a bullish momentum if price action breaks out of the neckline of that reversal pattern. So when we scale down into a much more lower time frame, we begin to see things clearly and how to set up our position in such a way that we can catch this opportunity when it finally matures. So let's scale down into the 1 hour time frame after digesting that information on the 4 hours time frame. So right now we are back into the 1 hour time frame, and this morning I dropped an update on my TradingView and Telegram platform where I said I wanted to see how price action will be reacting to this confluence here at the 1.23750, which also shares a confluence with our trend line. So depending on how price action reacts to the structure will determine if we are going to be buying or selling. But with the look of things right now, we already saw price break down that area, and when we scale up into the 4 hours time frame, what we saw on the 4 hours time frame requires that we have some level of patience around this area to see how the next 2 or 3 candles will play out around this area before making a decision from this point. But I'm still holding on to a bullish bias here. I'm not considering selling yet, as long as price action still remains above the bearish trend line. So I will still want to see something like a double bottom structure around this area. Then I want to start considering buying if it finally matures. So let's continue to hold on to a bullish bias on the GBPUSD. And if you had actually sold, well done to you for selling. You want to move your stop loss because anything could happen around this area. Secure your position and let's wait out to see what will gradually unfold around this point in the next couple of hours. So as long as price action remains above our key level at the 1.234, remember how we use our key level. As long as price remain above our key level, we continue to hold on to a bullish expectation. And with the way things are right now, price action still remains above our key level, and we still have the trend line that was broken around this area yesterday, sharing a confluence with that key level here. So let's see how it will react to that structure, and if we start finding buy pressure, we get ready to buy. And then if we do have a breakdown of the key level, then we should start considering selling. But remember, we are not jumping into a sell position by having a sell stop order, as we still need confirmations to happen before price will drop further to the downside. So I hold on to a bullish bias here. I'm still expecting a bullish expectation here. So let's wait out and see. And I will be with you in the comment section of both my TradingView and Telegram platform to give you an update in that regard. If you have any questions whatsoever, feel free to let me know in the comment section. So moving on right now, we are going to be talking about the next instrument for today, which is the which one is that again? I think, okay, we are going to be treating the XAUUSD, which is one of our profitable trade for this week so far. And what was our expectation during the live session yesterday? What did we see on this chart yesterday that made us to buy the XAUUSD? And one of the things we said here yesterday is that, considering the fact that price action remains above that 1,940, we continue to look out for buying opportunity in this market. So remember, we identified the structure which has been holding buy pressure since last week Wednesday. And one thing we also observed during the early hours of this week was that as soon as price action got into that structure, though we saw the breakdown of that level, we saw price action buyers respecting that level, negating sellers' attempt to push price to the upside. And for this fact, we said as long as price action remains above that structure, we continue to look out for buying opportunity. And one thing we agreed during the live session yesterday is that we are going to be placing a buy stop order above the 1,947. Remember, this was our resistance line at the beginning of the week after we identified this range between the 1,947 and the 1,943, which was the range where price action was trading during the early hours of the week before we saw this false breakout. Price dropped down again, another false breakdown. So it shows that we were within that range. And for the fact that price action remains above that demand zone, we had no other choice than to look out for buying opportunities in this market. And we also identified key structures like the 1,952 to add more position to our existing trade. So we were able to capture this buy position here, and we rode the move from this point all the way to the upside, giving us over 100 pips before we begin to see this old choppy situation happen. And then the second buy position at the 1,952 also welcomed more opportunity, and that one also moved over 80 pips before we started seeing this old choppy situation since yesterday. And now first of all, congratulations to those who took advantage of this buy position, and I do hope you moved your stop losses accordingly to lock in some profit. And if you had done that, you would have been taken out with at least a significant amount of profit on the XAUUSD. So well done to you guys. And for those who had missed out on that opportunity, well, let's look at the current structure we have here as we get prepared for both the London and the New York session. So the first thing I did here on this chart was to monitor what has been going on since last week, Thursday, in this market. And one thing I was able to come up with is that it's looking a little bit bullish in this market actually. As you can see here, we have been noticing buy pressure since last week Friday, and to acknowledge that we have higher lows to confirm these tendencies in this market. So when I connected a series of higher lows here, I was able to identify this trend line, which you can see here has been supporting the bullish momentum, though we had a breakdown yesterday which appeared to be a false one at this point, as you saw our price action climbed immediately back up to the trend line. So now going into the New York session and London session today, we are going to be using this trend line to guide our trading activity. So what this simply means here is that if price action remains above that trend line, we feel comfortable in our buy position. But if price action breaks down below the trend line and continued selling pressure happens, then we want to be getting ready to sell. Now let's look at the chart and see what is going on here and how we intend to position ourselves for these trading opportunities. Now remember, we had a key level at the 1,960, a level which was a very strong buying niche during the second week of this month, as you can see here, before the breakdown of that level happened midweek of last week. And since then, we have seen our price action has been trading below that structure. So it more or less shows us that we are at a critical point in this market right here, where price action has been finding it choppy since the New York session yesterday. So since price got into that area during the New York session yesterday, we saw how sellers continue to negate all bullish attempt from that area. So this key level here, coupled with the trend line we identified earlier, is going to be our yardstick for trading activity today. So we have a beautiful confluence between the key level at the 1,960 and the trend line to guide our trading activity. So if price drops below both of the structures, then definitely we want to be getting ready to sell. And considering the fact that price action has been bearish since the beginning of this month, a breakdown of that trend line is likely going to be signaling a bearish momentum. So if we are going to be joining a bearish momentum here, we want to see price action drop below the trend line. Remember, we are not getting too excited here. We are not jumping into any sell position yet, as we still need some confirmation to happen. So immediately after the breakdown happens, we want to scale down into our lower time frame, like the 10, 5 or 15 minutes time frame, to look out for retest or structure. So price action is likely going to come back retest the trend line, and continued selling pressure on our lower time frame will give us the leverage to join a decline to the downside. And one thing I would like us to note here is that we are still sitting above a very strong demand zone, which has been holding buy pressure in the last 4 days in this market. So we want to be very careful whenever price action gets into that area between the 1,947 and the 1,940, which was the initial range at the beginning of the week. So as soon as price gets into that area, we want to move all stop losses to secure that current sell position. Wait out and see how price action will be reacting to the zone to determine if we are going to be adding more sell position or getting ready for another wave of bullish momentum. But trust me, I will be with you right in the comment section of both my trading view and Telegram platform to give you updates as at when due on how to take advantage of an opportunity when price action gets into that level. And with the way we are seeing things right now, it's looking bearish as price action is trying to break through that trend line. Let's see how price action plays out from that structure. So we can conclude here that it's bearish. Yes, this candle still has about 10 minutes for it to close. So let's see how it plays out around that area. Now, in as much as we are looking out for bearish opportunity, if price action breaks down the trend line, we cannot ignore the potentials of buyers. And one thing I would like to call our attention to here is how important that area where price action is right now was during the course of last week. It was a very strong demand zone, as you can see here. So if price action comes back above this area, I want to be considering buying the XAUUSD. So that's our key level, of course, and if price action trades above our key level, obviously we want to be looking out for buying opportunity above that structure. So what I did here is to have my buy stop order above the 1,960 to be part of a bullish momentum if price action breaks above that level. And if it does that, we want to have our stop loss anywhere right below the previous structure here. We have a previous low around the 1,953 level, which will dovetail to about 50 to 55 pips stop loss on this market. And let's see how price action will play out from the structure. So above the 1,960, I'm looking out for buying opportunity above that area as we are back at the buyer's territory. But if we have this bullish trend line breach to the downside, that is price action breaks down the trend line, retest the structures a couple of times, then we will have no choice than to join a bearish move. And please take note that between the 1,947 and the 1,940 here, as soon as price gets into that area, we secure all sell positions while we wait out to see how price action will be reacting to that level, which will definitely decide if we are going to be adding more sell position or getting ready to do another buy in this market. So let's see how price action plays out. Trust me, I will be with you in the comment section of both my trading view and Telegram platform to give you updates as at when due. If you do have any questions regarding what I just explained, feel free to let me know in the comment section, and trust me, I'm willing to be of help in that regard. So moving on right now, we are going to be going into the last pair for today, which is, I think, okay, the USDJPY. And on the USDJPY, let's see what is really going on here. So on the USDJPY, we had some sell positions since the beginning of the week here, and we started selling after price action broke down that 140.530 here. That was on Monday, and during our live session on Monday, we acknowledged the breakdown of the structure. And what I said here is that for those who had missed out on this opportunity around the 140.530, that we want to wait out and see price action come back to retest the structure to give us another opportunity to join the bearish move. And in fact, we had some opportunities as we saw price action move about 60 pips in our favor before we were taken out with a small profit. You know how we do it. Whenever price action moves significantly well in our favor, we want to be moving our stop losses accordingly to lock in some profit, and which we did, and we were taken out of that position with, I think, about 30 pips thereabout on that one. Now, during our live session yesterday, we were using the 140.00 level as a yardstick to sell the USDJPY. So this was the level we were looking forward to yesterday to sell. So we were saying here that a breakdown retest of the 140.00 level will give us an opportunity to sell the USDJPY. And what buttressed the fact that we should sell? Now, the answer lies on the 4 hours time frame. So now on the 4 hours time frame, this is what we saw on the 4 hours time frame. A very simple ascending channel after considering the activity of price action since the beginning of this month. So with this ascending channel we identified here, we acknowledge the fact that price action is bullish in this market. As you can see, price has continued to find higher highs and higher lows in this market. But one interesting thing happened on Friday of last week's trading session, which we also took into consideration while reviewing this chart on Monday, and that was the fact that as soon as price action got into that 140.750 level, which happens to be the highest point price action has been for this year, we saw selling pressure resume around that area. The same thing to happen here yesterday morning. We saw a sharp rejection of the 140.750 level again to give us an insight into the presence of sellers around this area. And because of the situation we saw here yesterday, we said here that we are going to be anticipating a bearish move if price action breaks down the 140.00 area. And one thing you would have observed here in the last 24 hours, that despite the fact that price action broke down the 140.00 level, we have noticed the presence of buyers around that 139.700 area. And look at what has been happening here the last 24 hours. We can see how buyers had continued to negate all the bearish attempt from that structure. Now, it's a critical structure we have here, and which we don't want to ignore at this point. And because of the situation, I went to as far back as last week to see how price action reacted to that level again. And if you go to as far back as last week Thursday, we saw that same area serve as a strong buying niche at one point. So because of the situation here, we cannot ignore the potentials that the buyers have in this market. So if we are going to consider buying the USDJPY today, I would rather see price action climb back above the 140.0 level, not buy immediately. I want to see confirmation happen, like buying pressure above this area, where sellers find it difficult to drop below the 140 before I can start thinking of buying. And if a further breakout of the 140.750 happens, we definitely want to be adding more position to our existing trade. So that is how we are going to be buying the USDJPY today. But there is something here I want us to acknowledge. We already saw it yesterday, the continued selling pressure around the 140.750, and it appears that price action is transitioning into a reversal pattern at this point. And if you look at this closely, following the impulsive move that brought us to this point, you will see that we are looking at something that looks more like a head and shoulder pattern, where we have the head right here, and it appears that the right shoulder is still going through a transition phase for confirmation to happen, and where the 139.700 area will be serving as the neckline of this potential reversal pattern. So I called it potential because it is not yet validated. It will only be validated if price action breaks down the 139.700, give us some selling pressure below the structure that will now confirm that this reversal pattern has come to stay. So selling the USDJPY today, we want to see a breakdown, retest of the 139.700 before we want to be joining any momentum to the downside. So let's keep this in mind while we continue to monitor price action. So we already have the 139.700 identified here, strong demand zone. So far so good. So we want to see a breakdown for us to sell, and if this demand zone is going to hold, then a breakout retest of the 140.00 area will be welcoming a buy position for today. And trust me, I will be with you in the comment section as usual to give you updates as at when due. So that is that on the USDJPY. And on this note, I want to call it a day here. It has been a wonderful moment with you guys, and I'm very confident that going into both the London and the New York session, we are well equipped, as we were able to simulate all the potential opportunities that could happen here. All we just need to do is remain patient and wait for the structure to mature before we jump into any position. So let's see how it plays out, and trust me, I will be with you in the comment section as always, and to give you updates as at when due. Do have a wonderful evening, everyone. Bye bye.